Hey friends, so Kimberly-Clark, they're going to be acquiring Kenvue. This is the big news of the week, and I'm doing an impromptu video right now to cover 9 thoughts that I have on this mega acquisition. Just some background, I have owned Kimberly-Clark since $63 and change back in 2011. I've been reinvesting my dividends all these years, so the snowball has accumulated quite well for me. And so I did a YouTube short on this just last week because Kimberly-Clark had great earnings. I'll link to this short in the pinned comment below. They had great earnings and the stock was up on the news even on a day when the rest of the market was down. For me, it's still a sleep well at night stock, even though it went down 15% in a single day. I have confidence for my personal situation in Kimberly-Clark over the long run, but of course not investment advice. I have 9 thoughts that I want to share with all of you today on this breaking news. And so thought number 1, as you can see on the screen right now. And so when a stock that I own goes down so much so quickly, especially when it's a SWAN core quality sleep well at night stock like Kimberly-Clark, typically I am compelled to buy. And so it's just kind of a knee-jerk reaction for me. When something of this quality just tanks, kind of my operating mode as a PPCE and Thug Life dividend stock investor, I'm just like, hey, I better buy some more. And so most likely I will be adding to my position in Kimberly-Clark. And usually I will do that without even thinking twice for a core quality company that I own in my portfolio. That's just my personal investment style, though not investment advice. And so thought number 2, as you can see on the screen, check it out. This one is about just what I like about Kimberly-Clark. What I like about it here is it's at $100 and change. It is a forward PE now in the 13s. That's a solid value. It's not deep discount, but I'd say it's kind of discount value there in the 13s. 5% starting yield. For me to get a 5% starting yield on a SWAN stock when my portfolio average is at about 3.6, that's kind of a game changer for me. I'm closer to my financial goals. And so if I can mix in and blend in some 5% yield into my overall pie, which is at 3.6, that does a lot for my cash flow, which I want right now. And so again, I'm compelled to add a little Kimberly-Clark. As you can see on the screen in front of you right now, thought number 3 I have on all of this is, hey, are they overpaying? I did a little bit of back of the envelope math, and my conclusion was, I don't think they're overpaying. I don't think they're getting a really low discount price on Kenvue, but I also don't think they're paying. So Kimberly-Clark and Kenvue both issued press releases on their respective investor relations websites. The press releases were incredibly helpful. What I found is that Kenvue will receive, the shareholders will receive $3.50 per share in cash. Also, they'll get 0.14625 Kimberly-Clark shares for each share of Kenvue. This is expected to close at the end of 2026, so we have a lot of time we're going to be in limbo. They priced all of this as of October 31st, 25, and what Kenvue shareholders would get on that day, if everything was kind of held constant, is about $21.01 per share. However, we know that Kimberly-Clark dropped. It dropped a lot on the news. And that's expected with anything of this magnitude. When someone makes an acquisition of this size, I've never really, I don't think I can remember seeing the company making the acquisition not dropping. It's pretty standard. But anyway, Kimberly-Clark dropped. It's at $100.64. If I multiply that by the 0.14625, and I add in the 350, I'm down to $18.22. So it looks like Kenvue shareholders are going to get $18 and change for each share of Kenvue that they own. And so that is basically where it's priced right now. Now, if Kimberly-Clark drops more, that price goes down. If Kimberly-Clark goes up, the price goes up. Basically, though, let's just say things are going to be held constant. Kenvue's 52-week high is $25. So here's how I look at it. At one point in time, the market over the last year told us Kenvue's worth $25. And maybe that was a little bit Mr. Market getting a little excited because it was obviously before the Tylenol news where Kenvue is facing some pressure now. But let's just say Kenvue, it could possibly have a value of about $25 per share. Well, right now, as of today, Kimberly-Clark is getting the whole company for $18 per share. So at least they're not paying more than the 52-week high. At least it's a discount to the 52-week high. So that's my kind of back of envelope quick test. Are they overpaying? I don't think so. But honestly, when I started looking at some of the numbers that they were talking about, and they were talking about multiples EBITDA, I actually looked at some of that financial metrics, and it did to me kind of look like, hey, maybe they are overpaying a little. I guess what I've concluded is on some metrics, it doesn't look like they're overpaying. On others, it seems kind of expensive. Maybe what I would conclude is, hey, Kimberly-Clark, they're probably buying this at somewhat of a fair value. And does that make sense or not? You'll see, because I have some more thoughts. Let's keep going. As you can see on the screen in front of you right now, the next one is about Tylenol. So Tylenol, is it a liability, and will this bring liability to Kimberly-Clark shareholders? I don't know, probably. And so that's just something to keep in mind. I'm trying to be honest with these thoughts. And so there's good and there's bad, and I'm just sharing all of it right now. Again, some of the good so far is Kimberly-Clark is on sale now and might offer a buying opportunity. I'll probably add some more. But there's some bad. Like, are they overpaying? Probably not, but I don't think they're getting a steep discount on Kenvue. And honestly, Tylenol probably does bring some liability. And so those are some thoughts so far. I have a lot to go, though. As you can see on the screen in front of you right now, the next thought that I want to share is number 5. And this one is just, it's a bold move and a big move. Oh, my goodness. Kimberly-Clark's market cap is $33 billion, but they're paying $48 billion for Kenvue. Now, they're paying a little less now because these numbers fluctuate based on the market value of Kimberly-Clark. But long story short, ballpark, it is what it is here. There's a lot at stake. So you can clearly see why Kimberly-Clark went down. They're acquiring a company that's worth more than Kimberly-Clark itself. This is an incredibly bold move. And I think everyone right now is thinking, hey, this is not going to work out. This is scary. But what I'm thinking is, hey, what if they do pull it off? What if it works out? What if they can make this happen? Hey, in the long run, it could unlock some shareholder value. And so I kind of like bold moves sometimes. And I think the world we live in right now, bold moves oftentimes are required. So, hey, let's see what management can do here. But I got more. Check it out on the screen. The next one here is thought number 6. This is just an opportunity to possibly, hey, does it make sense to buy Kenvue stock? I'll tell you why it might in a certain situation. Hey, if Kimberly-Clark stock holds, one can possibly buy into the new entity at a discount via Kenvue. Why is that? Well, as of today, Kenvue is trading at $15.97. But we know if the deal were to close today, each Kenvue shareholder would get $18.22. I just did the math earlier in the video. Well, $18.22 minus $15.97 divided by $15.97. Basically, there's a 14% upside, arbitrage upside. So there's just arbitrage right now. And why would there be arbitrage? There would be arbitrage because, hey, maybe Kimberly-Clark stock could drop more. Maybe there's risk the deal falls apart. But for an investor who has some confidence and wants to get into this combined entity, might not own either stock so far, or just wants exposure to this deal or possible kind of arbitrage, there's 14% upside as of today if all of this goes through at current prices. And Kenvue pays a solid dividend right now of 5.2%. And so it's possible that the arbitrage investor could collect a dividend along the way as well. Now, for me, I'm not much of an arbitrage investor. I never have been. It's just not for me. And so for me, I like to keep things simple. I'll probably just average in, buy a little more Kimberly-Clark for my personal situation, but I could see that there are investors out there in the market who find value in the arbitrage. So I wanted to share that point today, but I got to keep going. As you can see on the screen, check it out. The next thought, number 7, is this is what I really like. Management is telling me that this acquisition, even at these really high prices, and it did seem the multiples on EBITDA were kind of high, it's accretive to EPS in year 2. So Kimberly-Clark is saying in their press release that there will be business synergies and this will be accretive to the EPS, earnings per share, in year 2. What does that mean? It means by doing this acquisition in the second year on an adjusted basis, EPS will end up being higher than it otherwise would be. That's why they're doing the acquisition, to create and unlock shareholder value over time. I'm taking that at face value. And it's kind of like, what if this all works out? If it all works out and it's accretive to EPS in year 2, that means that the earnings per share goes up. It means that Kimberly-Clark can pay me more dividends. I like it from that standpoint. So that's a positive in all of this. As you can see on the screen right now in front of you, let's keep going. So the next one is just theme 8, thought 8. Our population is aging. I like this idea of having a larger, more diversified company that addresses health, for all stages of life. And so Kimberly-Clark, kind of a paper company, but they provide health-related products. They have like Kimberly-Clark Professional. I'm sure a lot of those products are used in hospitals. Please put in the comments below if you're a doctor or a nurse, or if you're a dentist or optometrist, or you work in any kind of field, like related field. Let me know if you have any Kimberly-Clark products that are used at your hospital or your lab or your doctor's office. I'd love to know. But I'm assuming that with this acquisition, they're going to be able to address the medical needs of society and the aging population with more scale. And so that's something I would say out of all of this that I actually like with the acquisition is just we live in a world where winner takes all, and this will be a bigger entity combined. And with a bigger entity, they can do more for healthcare and for the aging population. As you can see on the screen, I have another thought. So we're moving along, and this one is thought number 9. This is just kind of fun. Kenvue is now back in my portfolio. Hey, J&J, my number 1 largest position, used to own Kenvue. They spun it off. They sold all their shares. I had no exposure to it because they sold all the shares. Now, Kenvue's going to likely come back under Kimberly-Clark if this deal goes through. So how crazy is that? It's just moving from one position to the next. That's sometimes how the stock market works. But what am I doing? What is my conclusion? And obviously, this is a quick video. I just want to get it out there, but I'm going to go through the numbers in more detail. But as you can see, here's my preliminary conclusion. What am I going to do? For my personal situation, not investment advice. I'm holding my Kimberly-Clark shares. It's a buy and hold forever for me. It's a SWAN stock. I'm adding some more, but probably in moderation. I'm holding them for the long term. Everyone's worried about it, but I say, what if it works? What if it works? What I would say, though, you clearly saw in the video today that, yeah, I do have some concerns. I have some concerns about the risk of the exposure to Tylenol. I have some concerns about Kimberly-Clark possibly overpaying here. I have some concerns about the scale of what's happening, that a smaller company is acquiring a larger company. And so certainly there's a lot going on here. There's a lot going on here. And will it be accretive in year 2? That's a big if. I'm taking it at face value. I hope it will be. I'm expecting it will be as a shareholder. I'm expecting that this comes to fruition. But it's a mixed bag. What I'm probably going to end up doing here is adding in moderation, seeing how it plays out, doing more research. But thankfully, as a dividend stock investor, Kimberly-Clark, it's not the only value I see in the stock market right now. My corner patrons, my backyard patrons, they see my stock trades. I'm buying a variety of different stocks right now, and there are other stocks that are on sale that also offer compelling value. And so I will be probably rotating, though, Kimberly-Clark into the mix. Thank you for watching. In terms of full disclosure, I am long Kimberly-Clark, ticker KMB. I'm also long Johnson & Johnson, ticker J&J. Also, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey for fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed investment advisor first. I'm just sharing my journey for fun and entertainment. Thank you for watching, and please put in the comments below what you think about all this news. I am telling you all, I have never in all my years as a stock market investor seen so much news coming at once. There's been news like this every day. Keeps it exciting, everyone. Thanks for watching. I'll see you in the next video.